Robinhood has been one of the biggest winners of this whole CCPV crisis. You know, everybody's at home, they're getting these stimulus checks, they're putting them in the markets. We talked about this a lot. Now, there's two ways to look at this. There's one side that says, this is great, we're democratizing finance. It's a wonderful thing to have everyone invest because there's no fees and everybody could just, download an app and throw money in. No more is it just the rich who can invest in the stock market. That's why it's called Robinhood, right? You take from the rich, give to the poor. Sure, okay, fine. But then there's also the bad side of Robinhood. When you have all these people coming into the market, markets are dangerous. There's a lot of risk and there's a lot of people getting hurt. And we're about to talk about this New York Times article that has examples of just that. Robinhood has lured young traders, sometimes with devastating results. Now, I said it before, I think that most people shouldn't invest. Not because they don't deserve to reap the gains from the stock market, but because investing yourself in the stock market is a professional activity. It's the same reason I wouldn't recommend that just anyone perform surgery. There's a reason doctors go to school forever. So unless you're a doctor, you shouldn't be doing surgery, and unless you're a professional, you shouldn't be investing directly in the stock market. So in a perfect world, we would all have financial advisors that do this for us, or at least guide us in the right direction. But unfortunately, it's tough to find one of those that is not a crook. So at the end of the day, even if I think people shouldn't be investing in the stock market, they have to, because there's no other option, because it is so difficult to find someone good. So if that's the case though, then everyone at least needs to know the basics, like the basics of how markets work, how to put a strategy together. Because if you don't learn those basics and you don't learn the methodologies that you need to know, you are for sure going to get screwed eventually. That's just what the market is set up to do. So whether you end up trading for yourself or you have enough knowledge to find someone who's actually good, like a good financial advisor, that's up to you. But the education for everyone is essential. As we're going to see in this article, what happens when you don't have the education. And that's why I'm sure you guys get annoyed with me pushing this training all the time, but it's really what you need if you're going to be in markets. And I honestly don't care if you get it here or somewhere else. Just get that education. And in this training, I go over my strategy and the one that a bunch of our Fallible members use, and it saved us a lot of pain in these markets. It's free, so if you haven't taken it, definitely do it now. There's nothing to lose. Worst case, you learn something that ends up saving you a ton of money down the line. Link in this video and down below in the description and comments. Now, let's get into this article with this guy, Richard, right here. He signed up for Robinhood in 2017 and he lost $860,000 in March alone. It's crazy. As we said, this article is going over the dark side. And quick disclaimer, this article talks about Robinhood, but a lot of this isn't just Robinhood specific. It's basically the same thing that happens with any brokerage. Because what are brokerages motivated to do? To make you trade so that they can make money. So as you see in this article, Robinhood is going to take the hit because they're the most popular right now, but no brokerage is going to save you. It's just up to yourself to learn. So Mr. Richard, who is now 32, said he'd been charmed by Robinhood's one-click trading, easy access to complex investment products, and features like falling confetti and emoji-filled phone notifications that made it feel like a game. After funding his account with $15,000 in credit card advances, he began spending more time on the app. Yeah, one of the worst things is when you start feeling like the stock market is a game, because it's not. In fact, it's supposed to be really boring. That's when you know you're investing well. Now, if you have some small account with money you don't care about losing that you're gambling with in the stock market, to me, I say that's fine. But if you're swinging real money, like your real savings, then no, it is the opposite of a game. In this right here, funding your account with $15,000 in credit card advances is a huge red flag. If brokerages were really on your side, they wouldn't let you do this. If credit card companies were really on your side, they wouldn't let you do that either. But again, at the end of the day, this is a business for these people. But you should never be trading with money that you can't afford to lose. You should not be going on margin, which is basically what this is. You're borrowing money to throw it in the market. Professionals are able to do that after years or decades in the market, but even them, they screw it up too. No way a beginner on Robinhood should be doing that. But Richard didn't stop either. He took out two $30,000 home equity loans so he could buy and sell more of those speculative stocks and options, hoping to pay off his debts. And his account actually shot up above $1 million this year, but he almost lost all of that recently. This week, his balance was almost $7,000. That's it, from $1 million to $7,000. And again, do I even need to say this? You should not be taking out home equity loans to be trading. That's insane. When he's doing his trading, he won't want to eat, is what his wife said. He would have nightmares about it. Another lesson here is if you're having nightmares about your trading positions and you can't sleep, you're doing something wrong. It usually means you're in way too big. You need to reduce the size and how much money you're investing. You should never, ever be having nightmares about trading. And as you can already see, Richard here did a lot of stupid things. This isn't Robinhood's fault. Is it Robinhood's fault that they allowed it? I guess kind of, but every brokerage does. Most of our financial system is made to screw the little guy, right? Now, Robinhood in particular has been real good at onboarding these new traders. That's why they're at this $8.3 billion valuation. They're a Silicon Valley darling. And like I said, they blew up during this CCPV mess. success. Now, part of the reason they've been successful is because they've been able to implement the same things that they had in Silicon Valley with all these apps, you know, like on Facebook, the notifications. They took that and applied it to trading. So they started doing those behavioral nudges and push notifications, all drawing those investors back into the market to trade more and more. And what's one thing that we always talk about this channel? Over trading. The worst thing you can do is have an app that's sending you push notifications to trade more, because that's when you start losing money. I talk about this in that training, but I literally spend 15 minutes a month trading, as in 15 minutes in my actual account making trades. I don't even look at it apart from that. And that's because I know the more I look at the market, the more I do stupid things. Because way before any push notifications or anything, the most addictive technology there was the stock market. Back in the 90s, when everything blew up with the tech bubble and everybody was trading, it's because they could watch dollars and cents go up and down all day. It's so addictive. So combine that with all the stuff that, you know, Silicon Valley has figured out over the last decade, and you got something seriously problematic. And more than any other retail brokerage firm, Robinhood users trade the riskiest products and at the fastest pace. So in the first 3 months of 2020, Robinhood has traded 9 times as many shares as E-Trade customers and 40 times as many as Charles Schwab's customers. They also bought and sold 88 times as many risky options contracts. Look at this difference between Robinhood and the rest of the brokerages. It's insane. Robinhood is doing something right from, you know, the perspective of their business owners and their investors, because they're getting all these people to trade over and over again, and that's how they make money. Now, even in this article, it says the more often small investors trade stocks, the worse their returns are likely to be, as studies have shown. That's what I was just talking about. Over trading happens to me too. The returns are even worse when you get options involved, of course, because they're, you know, leverage. And what's nuts is that Robinhood has had an unusual number of technology issues, and some of their employees who didn't want to be identified said the reason those technology issues are there is because they fail to provide adequate guardrails and technology to support their customers. When you're focused on growth like Silicon Valley style, why would you, right? And one of the worst things that happened, which I'm sure all you guys heard about, was that suicide of that kid, 20-year-old kid. He logged in and saw his balance drop to negative $730,000. So the app showed that, but he didn't actually owe that much. You know, there's some incomplete trades, but the software was showing him that, and he was so overwhelmed that, you know, he committed suicide. It's terrible. That's why I was saying this isn't a game. And lately there have been Robinhooders straight up confronting the staff at the headquarters about their losses, just showing up to the office. So this year they actually installed bulletproof glass at the front entrance. This is insane. So again, at the end of the day, Robinhood's core business is to get people to trade more, because they get paid through payment for order flow. Basically, every time, you know, someone trades, Robinhood sells that information to Wall Street firms so that they could pretty much front run them. Meaning if they know what stock a Robinhooder is about to buy, they could buy it at a lower price and then sell it to that Robinhooder for higher. And you know, they have the high frequency funds that do this. With all the technology, it happens in, you know, a split second. Now, that practice is not new. There's a reason why you could have zero commission trades. E-Trade and Schwab do it too. But what's interesting is how much more money Robinhood makes doing it. So for each share of stock traded, Robinhood makes 4 to 15 times more than Schwab. So in total, Robinhood got paid almost $19,000 from the trading firms for every dollar in the average customer account, while Schwab made $195. Look at this difference right here. It's insane how much more the high frequency trading firms are paying Robinhood. And experts believe it's because Robinhood customers are so easy to front run, because they're all beginners, right? So they'll pay more for those people because they make way more money off of them. And of course, you know, the Robinhood founders, they're gonna defend it. Like Vlad over here, he said young Americans risk greater losses by not investing in stocks. That's where we've gotten these massive inequalities that we're seeing in society, which isn't false, but it also doesn't mean they need to be trading, and they don't need notifications telling them to get back into the market and screw around. But of course, you know, these are the founders right here. Their goal is to democratize finance. Yeah, sure. And then they just have stuff that makes it feel like gambling. So new members, they're given free shares of stock as soon as they sign up for Robinhood. I'm sure you've seen YouTube comments, people posting their links. Oh, sign up and I'll get a referral. And you get to scratch off images to see what stock you got. And it's basically like a lottery ticket. Then the home screen on that app is a list of stocks. And if you touch one of them, you get to trade it. You know, it pops up right there. Do you want to trade? Try and place a trade on Ameritrade. It's way more steps than that. It's kind of annoying, but kind of a good thing too, because I myself actually go through a long process on Ameritrade just to make a trade. And you might think that's a bad thing, but when you think about it compared to this, it actually slows me down and it makes sure that I'm not over trading, that I'm sticking to my system and my strategy. And it makes me be very, very careful. And Robinhood has just had so many problems with that technology. Like they accidentally reversed the direction of options trades. They allowed their users to borrow infinite money to multiply their bets. And their website went down 47 times since March versus 10 times for Schwab. And in March, the site was down for almost 2 days. You guys probably remember that. While people were losing money left and right, things were crazy in the market. And you know, the company doesn't have any phone numbers for for customers to call because they don't want to. You're not going to get service from a company like that. That's why people rather go to Ameritrade and other brokerages when you have real money on the line, your life savings. Now, again, a lot of this is not just Robinhood specific. Like all these brokerages, they're not there to actually help you. They're there to make you trade more. Even when you go to their education sessions, like Ameritrade sends me emails all the time. It's not actually to help you learn so that, you know, you could make better decisions. It's so that you learn how to make more decisions and more trades, because that's how they get paid. So at the end of the day, you really just got to protect yourself and learn yourself. I know it sucks, but like you need to know how to eat healthy, right? It's just a thing that you need to do to live. You got to treat investing as the same sort of thing, to learn the basics at least. That's why I'm fine being annoying with these trainings and all this other stuff that I talk about, because no one thinks about the downside risk, because we're not naturally made as humans to think about downside. So I will constantly remind you about how dangerous the stock market is. But again, to grow our wealth, we got to be in it. So in this training, we go over how we do it, how we still stay safe, manage our downside risk, don't over trade. This is the one type of style where I'm like, trade less, like barely trade at all. Make a few trades a month, max. And the rest of the time, manage your risk. Anyway, you'll see what I'm talking about in the training. Do it today, especially if you don't have a strategy, or even if you do have a strategy in the market, just make sure that you got everything in line. Just make sure you're not missing anything. It's free, check it out. Link in this video and down below in the description and comments. Do it for your own safety so you don't end up like Richard over here. And I'm sorry, I know this is a serious article, serious topic, but some of the things in this article, they just make me laugh. Like how awkward must it be when they gotta go get these pictures for these articles, like for the photographer and the guy. It's like the guy just lost almost $900,000 and the photographer is trying to capture that. I just imagine the photographer being like this guy right here. Okay, Richard, I'm going to need you to look sad, like you just lost a lot of money. But I am sad. I did lose a lot of money. Good, but sad like you're an idiot. A stupid idiot who can't do anything right. Huh? Yes, that's much better. But I didn't do anything. Now you look a little too sad, Richard. We want the audience to know how stupid you are, but we don't want to make them depressed. What? Why are we in this park? Because you're poor and homeless, Richard. You lost all your money in the stock market. But my house is right over there. Richard, you bloody idiot. I need you to pay attention and do a good job here. Basically, do the opposite of what you've done in the stock market so far. Hey. Poor guy, leave Richard alone. I don't know, I don't think I would want to be in an article for losing that much money, but this picture just makes me laugh. I can't help it. I do hope he gets back on his feet though. Seems like a good guy. Just need that education though. But I also cannot believe they installed bulletproof glass at the front entrance. Like, what has Robinhood become? A restaurant in Detroit? I remember being in this one Detroit bulletproof glass restaurant, you know, where they got the bulletproof between the people taking the money and giving the orders and then the people ordering. It's honestly sad, but I think it was a Popeyes that I was in. I don't remember. But this lady got her order, looked inside her bag, and went off. She looked in her bag and was like, what the hell is this? You call this chicken? And then she took that chicken and threw it right at the glass. And that's when I realized it wasn't just meant to stop bullets. It was meant to stop chicken too. But she wasn't done either. Then she went over to the utensils and where the napkins and the sauce and all that is. And she just takes everything and throws it in the air. And she's like, what you need forks and napkins for? Not like you serve real food anyway. Then she takes the sauce packets and throws them across the restaurant. What you need sauce for? This small ass chicken too small to dip in anything anyway. Then she stormed out. And I looked in my bag and I was like, you know what? I agree with everything she said. She was completely valid with how bad that chicken looked. I wish I could do what she did. But I mean, at this point, what could I do? Like, talk to the manager? I mean, her performance already spoke for the people. So I had to just be like, oh, snickerdoodles. Hopefully next time they'll have better food. But the truth is they wouldn't, and they never did. It's my bulletproof glass theory. If you go up to an establishment and they have bulletproof glass, the other person looking at you from across the glass, they're gonna be looking at you like this. And do you really think you're about to get good food or service then when these people are just trying to live? They're trying to not get shot, or at least not get chicken thrown at them. Why would they focus on good food and service? It almost becomes like a terrible cycle because you give bad products and then people get so mad that they act out like that and then you're in danger. So you do need the bulletproof glass. And that just leads to a worse product and the cycle keeps going again and again. And I can't believe it's happening to Robinhood. But anyway, hopefully they figure it out because you do not want to be stuck in that cycle. It sucks. It's bad for everybody. The company and the people, and everybody hates terrible chicken. But anyway, check out the training, link in this video down below in the description and comments, and subscribe to this channel so we could talk about more stuff, more trading stuff, more education. Make sure we don't get in trouble in this market that's usually out to try and get us all the time, every day. So subscribe and I will see you in the next video. Stay fallible out there. Bye.